Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my European opening market comment for Tuesday, August 2nd. Well, the big event of the day is already over, the RBA, Reserve Bank of Australia meeting. They cut rates by 25 basis points, as I expected, and the Australian dollar weakened as a result. Aussie yen saw the biggest movement, with the pair falling 1.1%. The oil price collapsed overnight. It was down over 4% in one day. WTI, West Texas Intermediate, briefly fell below $40 a barrel for the first time since April. I thought Friday's rally looked a bit doubtful. I'm not sure whether this was just carry through from the recent fall or due to new news. Nigeria said it had resumed payments to former militants in its oil-producing region. That should reduce the sabotage of pipelines. These people have been sabotaging some of the oil pipelines, and therefore allow the government to boost oil production there. At the same time, Kuwait approved an increase in the local price of gasoline. That can be expected to reduce demand and therefore free up more product for export. The fall in the oil price, of course, has depressed commodity currencies and helped to boost the dollar. The pound, on the other hand, fell sharply after the disastrous UK manufacturing PMI was revised down even lower. Britain's manufacturing PMI saw the largest fall of any major country in the world in July, following the Brexit vote. But the good news from the PMIs was that Brexit doesn't seem to have had much of an impact elsewhere in the world. On the other hand, the PMIs don't seem to show much in the way of growth or engines of growth, as the major economies aren't that strong. Combining the fall in the U.S. ISM with the rise in the market PMI for the U.S., it looks like the U.S. economy is more consolidating than it is growing. That may make it hard for the Fed to raise rates this year and suggest the dollar might not gain as much as I had expected. Speaking of the PMIs, the European day starts with the market UK construction PMI. Now, Britain's one of the few countries where construction is an market moving sector. The index, which is already at a pitifully low level, is forecast to fall even further, in line with the collapse in the manufacturing and service sector PMIs. That would probably only add to the gloom surrounding sterling and could weaken it further going into Thursday's Bank of England meeting. For an update on the U.S. indicators coming out today, please watch my North American opening market comment later in the day. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.